sellers rarely sell what the buyer believes they're buying.
Even if I can fund it, I'll never buy the best business in the market. Yeah, I'll never buy the worst business in the market. I want to buy a good business for a low, sensible multiple that I can turn into a great business and really make it super sophisticated.
I leveraged LinkedIn to source my deals. And as I started to scale and started to provide services for others, right? I was taking these deals to private equity funds and investors and stuff. And they're like, where are you getting all these from? How do you do this? Can you do it for us? And then Protégés are like, I don't want you to teach me. I want you to do it. So yeah, we have that service.
Absolutely. I just need $10,000 a month and I'll sell my business. I said, well, why don't I become the annuity provider? He said, what do you mean? I said, well, I'll just pay you $10,000 a month. He said, you can do that? I said,
a very warm welcome to the Creative Dealmaker Podcast. I'm Carl Allen, I'm your host, and I'm going to be interviewing expert guests sharing investor strategies that will completely and utterly disrupt the market when it comes to buying and selling businesses all over the world.
Hey guys, Carl Allen back with another episode of the Creative Dealmaker Podcast. Got a very special guest today. It's Jim Helms, probably one of my best students. He's done some incredible stuff inside of the program, so much so he's now also a coach and a team leader and somebody that I depend on very, very much inside of this community. So Jim Helms, a very warm welcome to the show. How are you doing?
Thank you, sir. I appreciate that.
So obviously I know a lot about you, and I know you're up in the northern part of Florida. You're up in Jacksonville, right? That's where you live?
Correct, yeah.
Oh, yeah, and I know Chris Moore's in town, and I know he wants to hang with you because you're a legend. But yeah, just for the benefits of the viewers and the listeners, just give us your backstory. Like, how did you get into deal making? What did you do before that? And how have you been able to leverage all those superpowers and done some really cool deals that, we are going to talk about today?
Yeah, so my background is I spent 5 years on Wall Street as an institutional sales rep and market maker. And when they abolished the Glass-Steagall Act back in '96, I was given the option of moving to New York with my family that was born in Florida and 2 toddlers, or transitioning. So I got into the executive search space, and I had worked with that team during an internship previously. And it's been a whirlwind, man. I'm part of 2 partnerships that we exited successfully, and as well as a recruitment tech startup that we got VC funding and was housed in the Tech Commerce Center. And we exited that. You could say successfully, but I don't consider it a success because it was acquired by Monster. We had licensed Flipdog's web crawler technology, and so they acquired Flipdog and tried to buy us out, and we refused, and then they increased our licensing fee tenfold. So we graciously accepted their generous offer. And then I had another firm that I crashed and burned, and the financial recruitment was not very kind during the 2008 implosion, as you know. And then I was doing my own thing for a while. And so this kind of leads into my why. I had a very successful retained executive search practice for private equity clients. And I got a cancer scare and thought I only had months to live. They removed my kidney, and it turned out it was benign. I didn't have cancer at all. And so then right, knock on wood. But as I started to rebuild my practice up, I was approached by HIG Capital to replace their chief marketing officer in one of their portfolio companies. And as the discovery conversations unfolded, I took that, positioned myself as CRO for their portfolio company, grew them from 38 to 65 million during the pandemic. And then when I left, I went, I'm tired of starting recruiting firms. I want to buy one. So that's what led me to Protégé, obviously. And like all the other Protégés, I started out calling all the broker listings and got real frustrated with that real quick. And I went back to my strengths and did what I know how to do. And I ended up, I think the first deal, I know you've got some marketing collateral on it, but I think it was 51 days in, closed my first deal.
Yeah, that's amazing. Yeah.
Yeah.
Let's talk about that first deal. Let's talk about that first deal then. So your original buy, I know you've done lots of other deals since then, but your original buy box was recruitment because that's your lane. You probably heard me say it 1,000 times. Stay in your lane. You clearly did. But let's talk about that first deal. How did you find it? How did you close it?
So this was actually a referral from an old stockbroker friend that used to be my trading assistant. And it was an online coaching and options trading education platform. And so he made the intro, and conversations progressed quickly. And I actually partnered with a fellow protege. And we had to, between, I put a few dollars in the deal, he put a few more, and then the owner financed the balance.
Wow.
We've had some issues with that owner. I learned a lot on that deal, and part of that was ignoring some red flags and getting deal heat to get it done. So it's been an incredibly valuable lesson, not a successful acquisition at this point in time. We'll see what comes of it eventually. I have a plan in place to turn lemons into lemonade, but we'll see what happens. But after that, I said, you know what? I'm gonna take Carl's advice. I paid this man money for it, so I'm gonna take it. And I focused exclusively on recruiting and staffing agencies, and it snowballed rapidly for me.
Yeah. So that's what happens. Like sometimes, there's two things there that you mentioned that are really, really important. The first one is deal heat, right? So often we find a deal, especially if it's our first deal, and we get so hot about the deal, we'll not only ignore all the other deals in our pipeline, but we'll take shortcuts and we'll do those things. I've done it, you've done it, everybody's done it, right? And then secondly, if you'll compound that with buying a business that's not in your lane, it was kind of in your lane, I suppose, because you came from the financial world. So online options trading, coaching, it's kind of in your lane. But I'm thrilled that you learned from that first deal and then went into the recruitment space, which you obviously had a lot more experience with. But let's talk about some of those deals, because I know the last photograph I saw of you in our marketing with all those tombstones. You're going to need a bigger table for all of the deals you've done. But let's talk about the recruitment world, because this is one of my favorite industries. I've owned four recruitment businesses in my past. I don't own any today. I'm looking at some. I know you and I looked at one together about a year or so ago. That was a monster deal, wasn't it? It was like doing $20 million.
It was. It was it turned out to be a blessing that we didn't get it because of what happened in the economy. From the end of 2Q in 2022, first part of the third quarter, we saw Silicon Valley Bank fail and rates start rising, and so companies naturally start to claw back and stop their third-party spending for that stuff. And it impacted probably 80, 85, 90% of the recruitment agencies. But I quickly adopted and found a way to leverage that to my advantage with the annuity structures that I teach. So
let's talk about the annuity deal structure for a little bit. Have I ever told you the story about where the word annuity deal came from?
No.
So I'm on a call that this is about 18 months, 2 years ago, just before we started teaching annuity deals, and now there's been like over 200 annuity deals closed inside of Protégé. And as you know, I only teach you stuff that I'm doing. I don't teach you stuff that I did 10 years ago, because even though I was doing deals 30 years ago, the market's changed in the last year, right? So I'm teaching you stuff that I'm doing in real time. And when I go back to, I think, 2022, and I'm on a call with a guy that he owned a web design agency, right? So I'm on the call with this guy. And as you know, businesses are worth a multiple of their profit, which we call EBITDA. And generally, if this business was doing $500,000-$600,000 a year of EBITDA, so normally you'd be paying 2.5 to 3 times multiple for that type of business, right? So, but this guy's asking price was 6x, right? 6x was the price of this deal. So I said to this guy, I'm like, wow, you must have like a best-in-class business. You must have the best business in the market to command a 6 times multiple. Like, tell me about that. And he's like, what are you talking about? Multiples? I have no idea what you're talking about. My wealth managers value my business. I was like, whoa, hang on a minute. What do you mean your wealth managers value business? Wealth managers are not qualified to value businesses, right? Hopefully you went to a CPA or a CPA or an investment bank, hopefully not a broker, like who's valued your business? What is a wealth manager? Because I told him how much money I needed to make per month over, say, the next 10 years so I could fund my retirement without changing my lifestyle. So my wealth manager took that amount of money, I think it was $10,000, $12,000 a month, put it into his computer. Then the wealth manager calculated what would have to go in to an annuity product to generate that income. He grossed it up for tax and fees and all those different things. And that became the valuation of the business. I was like, wow, that's fascinating. I've never heard of that before. And then I thought about it. And I said, so really, all you want is $10,000 a month? He said, absolutely. I just need $10,000 a month and I'll sell my business. I said, well, why don't I become the annuity provider? He said, what do you mean? I said, well, I'll just pay you $10,000 a month. He said, you can do that? I said, yeah. The business was cash flowing, probably $27,000, $28,000 a month. So I thought, hey, I'll even give you half of it, right? I'll give you half the current cash flow. I'll take half the current cash flow. As I scale the business, you'll get the fixed amount. You'll have a full lien over the business if I don't pay you. I'll give you a performance guarantee so that it will prevent me taking all the money out of the business or doing something that you're not going to like. I can do the deal in a week. So you're not going to have to wait 5 months for me to go and raise SBA financing. I'm going to do practically no due diligence because no one's taking any risk. I'm going to make sure you paid your tax returns. I'm going to make sure that legally the business is safe to buy. It was an LLC and he wanted to sell the legal entity rather than sell me the assets and close it down. I said, we can get this done like super, super quickly. He's like, whoa, that's amazing. And then he said, well, I'm going to have closing costs. If I leave enough cash in the business, can you pay my attorney as a business expense? He said, I'm going to do this. And then he sat back and he thought, so my big question then, Carl, is would I rather trust the volatile financial markets to put my money in, pay loads of tax, and then hope I get an income stream? Or do I trust you as the safe pair of hands to own my business and take it to the next level? And he answered his own question. So that's why we call them annuity deals, because it's an annuity stream or a retirement stream of income that we give to the seller. And what blew my mind as we started rolling this out in Protégé and everybody started doing deals with this deal structure is how much like retirees, boomers, prefer income that's low tax versus a huge big capital gain with a huge amount of tax that they've then got to scramble to make that up in terms of what they invest in the market, right? So that's where the annuity deal structure.
Yeah, but he trusted you more than the financial markets, right?
That's right.
Which means you had massive rapport and credibility established with him. That know, like, and trust factor was just maxed out.
Yeah.
And that's a really critical point, I think, that a lot of people miss on annuity structures. Because as we get into these other deals, what I've found is it become almost like a brainstorming session with the seller of how to sell it to me. They decided they wanted to sell it to me, and we just had to agree on the price and terms, which made that process so much easier than
and
knowing the concept initially, right?
Yeah, you know why that's so powerful, right? And it's true. And I didn't realize this until I was in my 30s, right? So as you know, I worked on Wall Street. So I was doing like big M&A deals where those deals, it's about math, it's about tax structures, it's about legal structures. It's financial engineering. That's what Wall Street's all about. So when I left Wall Street and decided to buy small deals, like $1 to $10 million deals, what blew my mind, Jim, was how much more Main Street deals are about seller psychology than they are about numbers. That's why I wrote the book, The Creative Dealmaker, right? So I wrote that book because it tells the story of a deal with all the drama and the emotion and the psychology that buyers and sellers go through. And what I realized, my very first deal out of Wall Street, I bought a transportation company, like $5 million deal. The owner didn't really care that much about the money, right? All they cared about was the buyer. They wanted somebody that they could trust, that their business was going to be in safe hands. And a lot of the deals I've done since, I've done hundreds and hundreds of deals since I left Wall Street. And more often than not, it's all about the buyer, right? Because a seller, typically, they might have been in that business 10, 20, 30 years. They spent more time in their business than they have with their own family. And I suppose it's like sending your kids off to college. Like, you want to know they're going to be okay, right? You don't want to have to worry about them. You want to cheer them on from the sidelines. And I find a lot of that in a lot of these small business acquisitions. So to your point, if you can build like really strong relationships and rapport with these people and truly position yourself as a safe pair of hands to take the business to the next level, because the seller either doesn't have the energy or the heart or just the time to do it themselves, they'd rather sell to somebody like us in a creative way than to a private equity fund or a trade buyer that's likely going to rip the business apart, right?
Yeah. And a real quick story about that. This was a broker listing, and I made him an offer over a year and a half ago. And I used a multi-tier offer with the, lower multiple with the SBA, and then kind of a hybrid, and then the annuity. And he wanted the annuity multiple, but he wanted all cash like the SBA. And we've kept in touch. And I actually took him out fishing, and he's standing on my boat when we're out fishing, and shared with me that Benchmark set the expectation with him that they would get him a 9 to 11x multiple by selling it to a strategic trade buyer. And I scoffed at that and explained why. And he said, "Oh, you're right. You've been absolutely right about everything throughout that entire process.
Yeah.
And I'm probably going to sell my business to you, but I figured if I'm only going to get a 2 or 3x multiple, I might as well just keep it. I'm working 20 hours a week, and I'll keep it another 4 or 5 years, and then I'll sell it to you."
Yeah.
I was like, you know what? I would do the same thing in your shoes, right? He's my age. He doesn't need to retire. So
if he's working on the business and not in the business, so if he's only doing 20 hours a week and he's got a team that's taking care of everything else, that's actually a smart play. Especially if the business can grow, because not only is he getting the distributions from the cash flow every year, he's building that shareholder value for when it becomes time to sell it in the future, right?
Yeah. I just thought it was comical that Benchmark would knowingly set that expectation with them, and then all the offers are 2.5 to 4x multiples.
Yeah, and like, there's probably 1 in 100 businesses or 1 in 200 businesses that can command that that size of multiple. And what you and I both know is, in any industry, there's a range of multiples in that market, right? And that range is really, really wide. It could be as low as 1.5 and as high as 9 or 11, right? And that range of multiples, a business owner can't control that range. That range is controlled by the capital markets, as you know. So when interest rates go up, cost of capital is higher, that range shifts to the left, right? When interest rates are really low, like they were a few years ago, multiples were higher because the debt service to pay for loans to buy companies is cheaper. But what a business owner can control is where their business lands in that range of multiples. Now, luckily for us, most businesses are at the lower end of the range because they're not unique. They're not differentiated, right? If you've got the best business in the market in your industry, you can probably command like the highest multiple that there is, because every single person wants to buy it, right? I'll tell you a story. When I moved to Austin a couple of months ago, I saw my first ever Cybertruck, right? So I'm driving down the road. I bought my wife a Range Rover, right? So we're driving in the Range Rover, and this Cybertruck comes past me. It's the most beautiful thing I've ever seen, right? It's like the car I used to draw as a kid, right? Fell in love with this car. So literally, we stopped for coffee. I thought, I got to have one of these things. And my wife's like, crazy, but I'm going to buy a Cybertruck. So it goes on the Tesla website, $70,000, right? I'm buying one of these, right? I'm going to go buy one now. I goes on the website, I places the order, 4-year wait list for a Cybertruck. I'm like, 4 years? I want one like now. Well, if you go on Car Guru, I can buy one today, but it's $150,000, right? Because the supply is too low for the demand. And it's the same in a business, right? If you've got the best business in the market for what you do, everyone's going to want to buy it. And it's simple supply demand economics. It pushes up the multiple. But I will never buy a best in class business. Even if I can fund it, I'll never buy the best business in the market. Yeah, I'll never buy the worst business in the market. I want to buy a good business for a low, sensible multiple that I can turn into a great business and really make it super sophisticated. Because most of the businesses we look at, they have a low transfer of value score, right? So the owner is the business. They work in the business, not on the business. They don't necessarily have KPIs and systems and processes. They don't have a lot of recurring revenue. They might have high customer concentration. They might have a high turnover of employees, and they might have an average reputation in the market, right? That's most businesses. So most businesses by nature have an average or below average multiple, right? The very best businesses in the world, I don't want to buy those companies because then, I can't create shareholder value as quickly as I can, with an average business, right?
Yeah. No, I do the same thing. I'm looking, I tell protégés all the time, buyers rarely sell what the, or sellers rarely sell what the buyer believes they're buying, right? I'm going to model it and value it based on what you are, today and the last 3 years average and so forth. But my motive is what I can do with it in 5 years' time. And so back to my niche of recruitment and staffing, a lot of those guys struggle with those processes and systems and automating a lot of the tedious stuff, which is what makes them so burned out and frustrated.
Yeah. So how many deals? So remind me, how many deals have you closed since you came into Protégé?
Less than 2. Well, next month will be 2 years in Protégé here in a couple of weeks, and I just recently closed my 8th deal.
8th deal, perfect, good job, man. So, what are some of the biggest lessons that you've learned? I know you learned the lesson on the first deal about staying in your lane, but what are some of the other lessons you've learned across those other deals that you've done?
So I probably have more lessons learned from the one not so great deal than the others combined, to be candid. Yeah. But some of the things that I've learned with those are to believe in myself and that vision. Because one example was a staffing company, small staffing firm that did software engineers, and he was struggling with it because of the pullback in the economy and everything. And I saw just a slight pivot towards the AI model and going after those AI firms. And, we can track that, right, with PitchBook and Crunchbase and stuff, who's getting funded and by who and so forth. And when they get that money, they're going to go on a hiring spree. We know this, right? So we just followed the money, and I built an automated biz dev practice. And we've nearly doubled that one already in a year's time. And the guy was mind blown because he didn't think of that. So that one's been my biggest success out of them. But I learned to trust myself. But at the same time, with some of the others that are more relationship centric, like a hospital administrative staffing company. They're pure contingency, which kind of forced them into the annuity structure because no bank is going to fund that unless they would. For me, through SBA would be it, but I wasn't going SBA. those relationships are difficult to transfer, and I might have been a little too confident myself. So it's a balancing act, but I've learned to trust my vision and instincts and not overestimate my impact on stuff like relationships and whatnot.
Nice.
And that was difficult to do because I've been in the relationship business my whole life.
Yeah.
So you'd think you're pretty good at it, right?
Yeah, and I think that's one of the secrets probably to your success, right? I think you talked about a very powerful why at the start. That's always a great thing to have. But like one of the things, again, when I left Wall Street and onto Main Street deals, it shocked me how much relationships were critical when you're doing a Main Street deal. So obviously coming from a relationship industry, clearly you're leveraging that in a lot of the deals that you're doing and the success that you're obviously having.
Yeah. It's been that, and just, like I said, focusing on that rapport with the seller. A lot of people seem miffed that I don't even ask about the numbers. I let them bring it up. Everybody knows it's going to come up, and when I don't bring it up fairly early, they get curious, and so they want to bring it up. But I'm just focused on building rapport and trying to show them how I bring value without showing them my playbook, so that they get free consulting out of it. So there's a few lines that you've got to learn to, walk. But
I love that. I love that phrase, free consulting. That's the best way I've ever found to build rapport with somebody is add value to them before you get into the throes of the deal. And it's something my dad told me long time ago before he passed away. He said, Carl, relationships are like a bank account, right? Like you can't go and ask somebody for something until you've added value to them first. It's like money. You put money into a bank, then you can draw that money out, right? You got to put something into a relationship before you ask, something back. One of the things I do a lot is like when I'm scouting deals. Honestly, I got a big team now, but back in the day when I used to be scouting my own deals, I'd be talking to a seller and, they'd be all flustered. They'd be like, I can't deal with this right now. I've got all these challenges in my business, or I got all these challenges in my life. Can I come back to you in a few weeks? I would say, absolutely. I'll be here for you whenever you're ready. But in the meantime, what can I do to help you? Is there anything I can help you with in the business? Is there anything I can help you with in a relationship, in your life? Like one seller I was looking to do a deal from, fortunately had a death in the family, and he's like, hey, I'm pausing this deal for a month till I take care of the family. I'm like, that's fine, but anything I need to help? Can I get groceries for you guys? Can I do stuff to help you? And he's like, man, I don't even know you yet. You're wanting to kind of help me and get me out of this bind. Like, and I ended up buying his business because like when he decided it was time to sell, I was the only person that cared enough about him, not the deal, not the company. I just cared about him, right? And it just goes such a long way in a relationship. And you know this from your background, right?
Yeah. It's like the guy that I've referenced earlier that had his business listed with Benchmark. He, because I explained what those trade buyers look for and how they value it, right? I didn't charge him for that. Benchmark never had that conversation with him. Plus, I took him fishing, and we had a great time. So that adds value in a different way. But he just basically said, "I'm probably going to sell my business to you. I'm just not ready yet. If I can get a few more years of cash flow out of it, and then do it." And he's not wrong.
I love that story, and that's a perfect segue into something else I wanted to talk about. Then I'll let you go. So as you know, we talked about brokers, and some brokers are okay.
But brokers, I've got a couple that.
Yeah. So like some brokers are great, right? But sadly, not all of them. But when you're scouting deals, right? Once you've got your buy box figured out, and then you go into the market, start scanning for deals. There's two places that you can look. You can go on market. You can go to brokers, Biz, Buy, Sell, Transworld, Benchmark, all these guys. Or what we tend to do a lot more of in Protégé is off market deal flow, right? So we have all these amazing strategies. Like building relationship networks. You mentioned your first deal came through a referral. We do a lot of direct approaches where we write directly to business owners. But then one of the other strategies that we deploy, and I think you've really mastered this, inside of Protégé, and you teach on this, and then I think you have a service around this as well, is the whole concept of leveraging LinkedIn, right? So what I've never been able to fathom with LinkedIn is, it's like, I think if you work in business, it's probably the most powerful tool out there. And for the most part, it's free, right? Yeah, you can buy the premium service for LinkedIn Navigator, I think it's called, and find out all these really cool things. But just as a tool, a free tool for the most of the population, it's such an incredible thing that you can leverage, right? And I always say to people, build up your LinkedIn network, post on LinkedIn, talk about the deals that you're doing. Like, people will follow you, right? And you can find people on LinkedIn that potentially you can get money from them, you can buy their business, you can find deal partners, you can do all these different things. But talk to me about your system, because you developed this really, really cool system, like the Yoda system for deal flow. And a lot of the other Protégés are like, they're raving about it, right? And let's just talk about that for a minute.
So, backtrack to, when I talked about getting frustrated with the brokers, and I tell Protégés this all the time, play to your strength. Well, my strength was LinkedIn, right? I'm a recruiter, and, LinkedIn reached out to recruiters to utilize their platform when it was still in beta. So I've been on the thing since like 2003 or whatever.
Wow.
And, most people just kind of fill out their profile like it's their resume, and LinkedIn encouraged that. It's changing now, but there's over 1 billion profiles on LinkedIn. And it's not even close. It's the #1 B2B platform. And so I leveraged LinkedIn to source my deals. And as I started to scale and started to provide services for others, right? I was taking these deals to private equity funds and investors and stuff. And they're like, where are you getting all these from? How do you do this? Can you do it for us? And then Protégés are like, I don't want you to teach me. I want you to do it. So yeah, we have that service. But what I found is not every vertical is as well represented on LinkedIn as recruitment firms, right? Obviously, but it's still the best platform for sourcing targets. But LinkedIn limits you to the outreach. So we had to become masters of the cold email. And then we had to, find an alternative way. So now we've got a system where we source them and we target them on LinkedIn, Facebook Messenger, Instagram DMs, Twitter DM or X DMs, as well as cold email and SMS. And then with the new regulatory environment, SMS become problematic to scale. Right. And so I found a way to connect an eSIM card to our CRM.
Wow.
Can send unlimited text, and it's mobile. It's because I send 25, 30,000 SMS messages every month. And those we get, like a 26% reply rate on. It's just astronomical compared to the other stuff other than LinkedIn. But LinkedIn limits you to a couple hundred a week, right? So it's you can't scale that. So yeah, it's been a lot of trial and error, a lot of late nights and grueling hours, and I've had to become way more technical than I cared to. But yeah, that's kind of how we did it. And then, that's what led me into the last 2 acquisitions. One was a marketing agency that exclusively did marketing for recruitment agencies and staffing firms. And then the last one is a database. So it was a co-op of recruiters that shared their databases. It was on a SQL platform so that we could search it for sourcing candidates and client marketing and whatnot.
That's so cool. And remind me, what's the name of the program?
It's we call it a Deal Yoda done for you service, but it's the company Yoda Marketing. Yeah.
Wearing my Star Wars t-shirt, especially for this podcast interview, right? So I was showering this morning. I was looking, I thought, right, I'm talking to Jim Helms today, and we've got the Yoda program for LinkedIn. So I'm going to wear my Star Wars t-shirt in honor of, like, not only you building.
That's awesome.
Not only in honor of you building that and doing some incredible deals for yourself, but then your ability to coach that to the rest of our community and really help them get deals as well off that, which is amazing. So Jim, we love you, man. I hope you spend some time with Chris while he's up there.
Yeah, I've got it. Month's almost over. I need to get together with him and take him out fishing. So
Yeah, I know. But hey, I really appreciate your time today. Keep doing everything that you're doing your deals, making money, helping me coach this incredible tribe of people.
It is awesome.
No, I really appreciate you, Jim. Thanks for everything that you do.
Likewise. Thanks, Carl.
Really appreciate you being on the show.
Yeah. Thank you for having me.
Take care, guys.
Bye.